Hey, I'm Sticca Snyder, founder and CEO of Taxanista, and I want to talk to you about the differences between a 1099 and a W-2. Most people get W-2s, and what that is when you're an employee and you're working for someone else and they're withholding taxes for you, then you get a W-2. It's the most common way of getting paid. A 1099, on the other hand, is when you're doing side work, maybe a gig or some extra work for somebody, or you have your own business and your customers then give you a 1099. That income is not taxed before you receive it. So when you get your income, it comes to you in a gross format. With that, then you get to write off deductions that go against that income. So if you're new to a 1099, then let me tell you a few things. So you might want to get a pen and paper and save this one, okay? One thing to remember is no receipt, no deduction with the IRS. So it is very important that you save your documentation. Credit card statements will not support you in an audit. What you need to have is a receipt that shows what was purchased. So if you go to a store and they hand you that receipt, you need to make sure you take a picture of it to save it. If you buy something online and a receipt or an invoice is emailed to you, I recommend setting up a folder on your computer, probably in your email, that's called invoices or receipts. And that way, each time you get one, you can just drag and drop and put it in there. Because you want to make sure that every item on your tax return you've got support for. So now that you're a 1099, you want to make sure that you're keeping track of all expenses involved in carrying out your duties of whatever function you're doing in order to earn that money. So if you're driving for business purposes, then you need to make sure you have a mileage tracking app. That's the second thing that's most important when you get a 1099. There's lots of good free ones out there. You can turn it on and it just runs in the background. Technically and legally, you are supposed to have the starting and stopping odometer reading, as well as where you went, who you went to go see, and what was the business purpose. If you keep a good electronic calendar, then more than likely, a lot of that is already on there. So if you keep your good mileage tracker and you've got a good electronic calendar that's got your appointment on who you were going to see, usually you have an address in there because you wanted to press the GPS in your car, then if you're audited, you could match those back up. If you're real organized and you want to do it now, by all means do that. But I find that a lot of business owners have more time to spend on making money than keeping track of this. So as long as you've got really good support, then you'll be fine. The way a 1099 works is even if you're a sole proprietor or an LLC, you still would report your income and expenses on a Schedule C small business form. It gets filed with your 1040 tax return. Basically what happens is you report your gross income, which would be all of the income you received before any expenses. It is very important that the total gross income on your Schedule C at least equals or exceeds the sum of all your 1099s. It's important because if you have 1099s that are greater than what you're reporting as income, you will automatically receive a notice from the IRS because it does a matching system. And if they mismatch and your income reported is less, you'll get a notice. So it's important to make sure that you report all of your income. Second, once you've reported all of your income on the Schedule C, you get lots of deductions that you can take. Anything that you incur in order to operate your business is deductible. advertising, marketing, promotion, anything you're doing in order to get your name out there to potential clients is deductible. So whether it be pens or business cards or flyers, all that kind of stuff that you are expending in order to get people to notice you. The auto, people will ask questions on whether it's better to take mileage or actuals. I always say it's better to take mileage. So get your mileage app and make sure it's running all the time in the background. Other expenses that you can incur would be retirement plans. You can set aside money for yourself in retirement. Any office expenses or office supplies, your cell phone use, even your home office. Home office is not the risk it used to be. So for instance, if you do work out of your house and you have a home office, but you're really conservative or you're unsure, then just take the standard home office, because you can definitely take that. And it doesn't require any kind of supporting items. So again, the basic difference between the W-2, which is when you're truly an employee, and the 1099 is that your Social Security and Medicare taxes come out of the W-2, and the employer also pays their half. When you get the 1099, you report your gross income, you have your deductions to come down to your net income. But remember, there is no taxes withheld from your 1099. So since you are considered self-employed, you're both the employee and the employer. So you then pay the self-employment tax, which is 7.65% times 2, which is 15.3. So when you're a W-2, you pay 7.65 and your boss pays 7.65. When you're self-employed as a 1099 contractor, you are responsible for both sides. It is possible to actually have no income tax, but have self-employment tax. When you are self-employed, you will always have a balance due on your tax return if you have any profit. Let me repeat that, okay? If you don't make estimated tax payments, there will always be tax due when you are self-employed and have any profit, because that 15.3% goes automatically on the net profit from your Schedule C, which is where you can report your 1099 income. So 1099 or W-2, if you had a choice, I'd go 1099. Thanks for checking out this video. Subscribe if you haven't already, and if you want to see more, just tap right there.